Hello everyone, welcome to my YouTube channel. In this video, we are going to talk about Waaree Renewable Technologies Private Limited. We will see what is their business model, how they have performed in the Q2 of this financial year, and whether this is an investable company or not. So before I directly jump into the business model, I would like to tell you that whichever stock that you invest in, it is very important that you understand their business model properly. If you do not understand the business model of any stock properly, don't get influenced by the numbers and directly invest into that stock, because if something wrong goes with the business, or if there is any policy which is against the company's stock will come down crashing and you will not know what to do. You will be confused whether to buy the stock when the price is going down, just to bring down your average buying price, or whether you should be exiting the stock. Even if you decide to exit the stock, you will not be the first of the persons who would have exited the stocks, because those people who understand the business model properly, they would have already left the stock, and by the time you exit the stock, whatever gain that you had made in the stock, even that will get eroded. Or you might also be confused whether to remain in the stock and wait for the stock price to come back to your buying price. So hence it is very important that you understand the business model. If you do not understand the business model, it is not necessary or it is not important for you to invest in those stocks. You can be invested in those stocks where you understand the business model. If you do not understand the business model, you can skip the stock. You don't have to be invested in every stock which is posting good numbers, because you don't have to board every single bus, right? If you miss some bus, then definitely there will be another bus which will come for you. And you can be invested in those companies where you find it comfortable in understanding their business model. So coming to the business model of Waaree Renewables Technologies, so basically this company has three revenue streams. The major revenue stream for this company is solar EPC. Waaree Renewables is a market leader in the solar EPC space. Now EPC stands for Engineering, Procurement and Construction. You will hear this term EPC in multiple different industries, but Waaree is into solar EPC. So what it basically means? So Waaree is into the construction of solar projects. Okay. So who are the customers? So basically the governments or large corporates, so they would want to set up solar plants, but they do not have the expertise in this industry. So what they will do is they will float the tenders for any construction company who can come up and do the construction for these solar projects. And Waaree Renewable is one such company which will bid for these tenders, and basically they will do the construction of these projects. So this is the major source of revenue for the company. It is called the EPC. The second revenue stream for the company is operation and maintenance. So once the solar project has been constructed, so who is going to operate and maintain that? So companies like Waaree Renewables, they will do the construction and they will hand it over to the customers. Now it is at the customer's choice whether to operate it themselves, or they can again give a contract to some other company for its operation and maintenance. So here also Waaree Renewable comes into picture, wherein they can enter into those projects which are already constructed, but this time for its operations and maintenance. So it is similar to you bought a vehicle, but that vehicle will require operation and maintenance on a regular basis, right? We do the servicing of our vehicle. So very similarly for these large solar projects also, it will require regular maintenance. So this maintenance is basically outsourced to companies like Waaree Renewables. Then lastly, they have another revenue stream called IPP. Now IPP stands for Independent Power Producer. Now let's say there is a government. You can take example of any state government. For our example, let's consider Maharashtra government. So Maharashtra government wants to generate electricity through solar, but they do not want to invest a lot of money in buying the land, setting up these solar projects, large solar projects. So what they can do is they can basically ask other companies like Waaree Renewables to set up the entire solar project. Okay, the government would not be investing a single rupee in setting up the solar project. So whatever the cost is incurred in buying of the land, in setting up the solar project, that entire cost will be taken up by the company. But the government will sign a power purchasing agreement with this company, in which the government will give a guarantee that going forward for the next say 15 years, 20 years or 25 years, we will be buying electricity from you from this particular project. So basically it will be at a little premium price. So this way some of the companies also operate, wherein they will do the investment, they will buy the land, they will set up the solar project, and they will sell the electricity to the government or large corporates. So this is called IPP model. So this is also one of the revenue streams of Waaree Renewables, but the revenue share from this model is very small. So majorly they make money from the solar EPC. That is their largest contributor of revenue. The second largest contributor is the operations and maintenance, and the small piece is the IPP, that is independent power producer. So who are the customers of Waaree Renewables Technologies Private Limited? So majorly it is the large corporates, then we have the public sector units, then government is their customer, then also retail customers like Waaree Renewables. They also undertake projects like rooftop solar installations. So because of that reason, even the retail customers, they are also the customers of Waaree Renewables. So let us see like who are some of the major customers of Waaree Renewables. Companies like or corporates like SLR Mittal, L&T, Reliance, Aditya Birla, NTPC, Adani, Jindal Power, Mondelez. Then we have Bharat Petroleum, Baidyanath, Inox Green. So these are some of the companies who are the customers of Waaree Renewables. Now let us see what are the growth prospects within this industry. If you talk about the installed capacity of electricity generation in India, it can be broadly classified into two categories. The first category is the electricity generated through fossil fuels, and the second category is the electricity generated through renewable energies and hydroelectricity. Now in the past, the electricity generated through fossil fuels was always higher compared to the electricity generated by the combined rest of the sources of electricity. But in 2000, in the financial year of 2025, the share of electricity generated by renewable energy and hydroelectricity has surpassed the electricity generated by the fossil fuels. So in FY25, it is nearly, I can say 50-50%. So 50% of the electricity is generated using fossil fuels. When I say fossil fuels, it is through thermal power plant. Then the 50% of the remaining electricity is generated through solar energy, wind energy, all the different forms of renewable energy sources, plus the hydroelectricity. So there is an estimate that by financial year 2030, the share of electricity generated by this renewable energy and hydroelectricity will reach anywhere between 400 to 450 gigawatt. So today it is around 250 gigawatt. So from 250 gigawatt, it is expected that it will reach 400 to 450 gigawatt by financial year 2030. Now, if we talk about the electricity generated by fossil fuels, today it is at 254 gigawatt, and there is not going to be any considerable increase in the share of electricity by fossil fuel. By 2030, it is expected that it will be in the range of 262 to 276 gigawatt. So whatever the government's investment is going to happen, it is going to happen towards the renewable sources of electricity and not towards the fossil fuel, because of the obvious reason that the fossil fuels, they generate a lot of pollution, and at the same time there is a lot of dependency on coal, and coal being a limited resource, so government do not want to continue investing in this form of electricity. Now, talking about the solar power in the renewable energy share. So today the installed capacity of solar power in India is 106 gigawatt. So it is expected that by 2030 this will increase to 280 gigawatt. So there is a 21% CAGR increase from FY25 to FY30, which tells us that there is immense growth in this industry, and all the companies who are part of this industry, they would be benefiting from this growth. Now, if we do a breakup of electricity generated through various different sources, so in FY25, the largest source of electricity generation is the coal, which is at 47%, and the second largest source of electricity generation in India today is the solar energy, which is at 22%. But from here, if we talk about the financial year 2030, it is estimated that the solar energy, which is today the second largest form of electricity in India, it is going to surpass the electricity generated by coal, and it is going to reach a share of 38%. So from 22% today, by FY30, it is going to be the largest source of electricity generation in India, and it will have a share of 38% in all the electricity, all the forms of electricity that we will have. The share of coal or the electricity generated through coal is going to drop from current 47%, it will come down to 35%. So as I already told you, that government has no plans to continue making investment in this form of electricity. So obviously the share of coal is going to come down from 47 to 35%, and the share of solar electricity is going to increase from 22% to 38%. Whichever company that you decide to invest in, you should always see whether the government policies are favoring that industry or it is against that industry. Now, if we talk about the solar industry, we all know that this is a sunrise industry, and most of the governments, whatever the policies that they make, they are always favoring this industry. So let us see what are some of the policies made by the government, which is basically favoring this industry. So one is the solar park. So government is also moving towards generating electricity through renewable sources, because of which they are setting up solar parks in different parts of the country. So whenever they make such an investment, so basically they float tenders, and companies like Waaree Renewables, and in fact all the companies who are operating in this ecosystem, they will benefit from this. Second is the PLI schemes, which we all know. It is a scheme from the government to subsidize or encourage domestic manufacturing in India. Then thirdly, there are schemes from government which are for the rooftop solar. Like one such scheme, if I have to name, PM Surya Ghar Muft Bijli Yojana. So many such policies are there, basically from the central government as well as from the state government, wherein they are encouraging the local residents to set up rooftop solar at their home or in their societies. Then there are policies towards energy storage. One of the biggest challenge of solar energy was that it was difficult to store that energy. But nowadays there are batteries which are capable of storing the electricity which is generated through solar energy. So there are schemes coming up in this direction also from the government, which is benefiting this sector. Then lastly, there are other policy changes, like recently the GST has been reduced from 12% to 5% on the solar modules. So setting up of the solar panels is more viable and lucrative to many people, which is acting as a tailwind for this industry. Let us now look at the financial performance of Waaree Renewables. In the last financial year, the revenue from operations was nearly 1600 crores. In the first half of this financial year, the revenue from operations is at almost 1400 crores. So whatever the revenue was in the last financial year, so in just first half of this financial year, the company has almost achieved a similar revenue. Talking about the order book, in the last financial year, the order book was at 3.26 gigawatt, and in the first half of this financial year, the order book is at 3.48 gigawatt. Now you will see that there is no or there is only slight increase in the order book, but this increase might look to you very small, because their pace of execution has increased a lot in the first half of this financial year. Like if we talk about the last financial year, the orders that they had executed, it was 1.5 gigawatt. But in first half of this financial year, they have executed an order of 1.6 gigawatt. So their order of execution has immensely increased, but at the same time, their order book has not increased much, because they have taken a lot of orders into execution. So that is why you will see less growth in their order inflow. So this is one thing that I wanted to highlight, that their order of execution has grown tremendously, but their order inflow has not grown at the same pace. So even their sales team will have to work as strong as their execution team, so that they have enough orders lying in the lying unexecuted, so that can be taken up in the upcoming quarters. So from the current order book, we have a visibility of 12 to 15 months. This is what the management says, that the current order can be executed in a span of 12 to 15 months. So we have revenue visibility for the upcoming 12 to 15 months. Let us now talk about the financials of the company. On YOY terms, the revenue this quarter has increased by almost 48%. In the same quarter last year, it was 524 crores, and in this quarter, it is 774 crores. The EBITDA margin, the EBITDA has increased 120%, and the EBITDA margin has increased from 13.65% to 20% in this quarter. The PAT has increased 117% from 53 crore to 116 crores. So let us now talk about the management outlook. So in the concon, management has not given any clear guidance on the revenue part. They have also not given any guidance on the order inflow. But instead, what they have mentioned is they are bidding solar projects of nearly 37 gigawatt. Now, out of this 37 gigawatt, how much they will be able to convert? So there's no clarity on that. We will have to wait and watch in the upcoming quarters. Regarding the EBITDA margin, the management has mentioned that they would be maintaining an EBITDA margin of more than 15%. So due to better operational efficiency and cost control, they are able to report higher EBITDA margins, but their internal target that they have with regards to the EBITDA margin is minimum 15%. So if they are not able to achieve the EBITDA margin of 15% in any of the project, they basically do not enter into that project. Let us now talk about the peer comparison. So you might see a lot of companies who are into solar space, but all of those companies may not be the direct competitor of Waaree Renewables. If you go to screener and if you go to the peer section, you will see some companies, but most of those companies are not direct competitors of Waaree Renewables. So out of all the companies that I looked for, there's only one company which I could find who is a direct competitor of Waaree Renewables, and that is Sterling and Wilson Renewables, because this is one company who is also into pure play solar EPC. Now, if we compare with this company in the Q2 of this financial year, the results which were reported by this company, the revenue has gone up by 70%. Although the increase in the revenue is greater than what revenue increase has been posted by Waaree Renewables, the operating profit margin of Sterling is at 0%. So although they had a better revenue growth, but what is the point if they are not able to protect their margin? So their margin has been eroded and it is at 0%, and PAT is minus 478 crores. So obviously there's no comparison with Waaree Renewables. Waaree Renewables has been consistently growing. It is able to maintain its margin and it is consistently making profits. So when compared to Sterling, Waaree is definitely the winner. You will see that the PE of Sterling is low. It is only because the company is not performing well. So don't be influenced by low PE and start investing in Sterling. Rather, you can look at Waaree Renewables, who has been consistently performing. Now let us talk about some indirect peers. Now there are some companies into solar space like KPI Green, Adani Green. So these are not direct competitors because KPI Green and Adani Green, these are into IPP model. So the revenue share of IPP in the case of Waaree Renewables is very small, as I had already told you. So there cannot be a direct comparison between Waaree Renewables and KPI Green or Adani Green. Similarly, there are other companies like Websol Energy System, Vikram Solar, Acme Solar Holding. So even these cannot be compared with Waaree Renewables because these companies, they have a mix of solar EPC. They are also into manufacturing of solar cells, solar modules. So there cannot be a direct comparison between them. Let us now talk about the strengths of Waaree Renewables Technologies Private Limited. So Waaree Renewables is the largest EPC player, which has a project execution capacity of 100 megawatt to 2 gigawatt. So it can take any project within this range. So since it is a market leader, there is a brand building for this company and they can command better margins. So one good thing about this company is that they do not compromise on the margins as told by the management. So if they are not able to get an EBITDA margin of more than 15%, they basically do not take take the projects with low margins. Then secondly, their parent company, which is Waaree Energies, is into manufacturing of solar cell and solar modules. So there is a synergy within the group. So whenever they get any EPC projects, so for them sourcing of the solar panels is not difficult. With this, I'm not saying that they only procure the solar panels from their parent company Waaree Energy, but there is a stability when it comes to the supply of solar modules for this company. Now let us see the weakness, or let us look at the challenges. The only challenge that I find here is that since this is a growing sector, it attracts a lot of companies. So it is a very highly competitive space. So as the competition increases, there is a pressure on the margin. But so far the company has been able to protect its margin, which is good. Going forward, we will have to see whether it continues to protect its margin or not. What are the growth avenues for Waaree Renewables going forward? So as I mentioned to you at the start of the video, operations and maintenance is one area where the company is very optimistic about. So currently they have 750 megawatt of orders which they are operating and maintaining. So going forward, they want to increase its share. So this is one area from which the company thinks that they would get more business going forward. Then the second area for them is battery energy storage system. Now, as you might know, in the solar projects, the electricity is only generated during the daytime. But at the night time, there is no generation of electricity, and they will have to rely on other forms of electricity. So, these many days, there were no batteries capable enough to store the electricity generated by solar energy. But now there are batteries which are able to store that electricity. So going forward, most of the projects are going to be a hybrid form of projects, wherein during the day, the electricity will get generated through solar panels, but during the night, the same energy, whatever the excess energy which was generated during the day, it will be stored in the battery, and the energy from the battery will be supplied during the night time when there is no sun and electricity generation is not happening through the solar panels. So this is one area which can be an extension of the EPC business that they are doing today. Right now they have very small order with respect to BESS. They have order of only 40 megawatt, but going forward there can be a room for the company to grow in this market as well. Then another growth avenue for the company is the data centers. Now you might be aware what the data centers are, and the government has also made a policy wherein the data of India should sit within India, it should not go outside of the India. So this has forced a lot of IT companies, lot of technology companies to set up their data centers in India. So whenever there is a data center being set up, so there is a huge demand for the electricity by these data centers. The company projects that the market potential of data center can go up to 1 gigawatt in the next 4 to 5 years. Today they do not have any orders for data centers, but going forward the company thinks that there can be inquiries and there can be orders coming from this side of the business as well. So lastly, let us talk about the valuations of the company. The current PE of the company is 37, and as I had already mentioned that the company has not given any revenue guidance, so we will not be able to calculate the forward PE for this company. But even today, if I consider 37 as the PE, with a growth engine which is growing at an upwards of 50%, I feel the company is very fairly valued and we can make investment in this company. However, please note that this is not any investment call or investment advice. Take this video as a learning and only for education purpose. Do not consider this video as a recommendation for this stock or any other stock which I have discussed in this video. I hope this video was informative and you have gained some helpful insights on the topic. For more such videos, subscribe to my channel. We'll see you in the next video. Until then, goodbye.